Okay, welcome to the spooky October 31st edition of the Fats, Fuels, and Oils webinar. Even though it says September 26th, I just forgot to change that this morning. This week, we're going to talk a little bit about what's going on in South America, and then we're going to go through the combined used cooking oil and yellow grease balance sheet and talk a little bit about what's happening there and what's going to happen. Before we get into all of that, haven't had a chance to look at all of the monthly feedstock data that's come out from the EIA today, but one of my colleagues wrote me and said that there was a huge increase in tallow consumption, and asked me did I think that made sense. It does. It suggests that probably there's a big increase in imports. But it'll be kind of interesting to see how that sort of fits in with the rest of the data for fat and grease production that we already got last month, and then what next month looks like. I would assume that we probably will see a big bump in imports in for tallow in the next month's trade data as well. The main thing, though, is that I think we've looked before at sort of the yield, the implied yield data from the EIA feedstock data, and it's always looked a touch low. And so one of the things that I said was, it doesn't ever really surprise me a lot when the EIA reports really big feedstock usage, because our model predicts feedstock usage well above what the EIA usually reports. And I can understand some of the difference, but we're off by almost 50%, I think, or maybe not quite that much, but a substantial amount. And so a couple of months ago, when the EIA went back and revised all of the old data for a year or so, a year and a half, I guess, all of that sort of fit a little better with what we thought was sort of going on. And while I don't think it narrowed the gap completely to our estimates or to our predictions, it did narrow it a bit. And I don't say this to say to sort of, say the EIA is not doing a good job, or I don't think that they have good data. I think they have really good data. I'm very thankful for it. And if I have one complaint, it's only that they don't break out biodiesel and renewable diesel usage for all of the feedstocks like they do for soybean oil. But outside of that, I think that they do a very good job. But it's always a little strange to me where their feedstock usage comes in and sort of the yields that implies. And so maybe this is actually sort of the beginning of our estimates getting a little bit closer to what the EIA reports. But I guess we shall see. And next week, after I've had some time to look at the data, we'll talk about it a little bit more. All right. So let's talk about South America. The planting progress in the growing season is still really early in South America. That said, there are a lot of places in Brazil where soybean yields will start to fall if the crop is planted later than, it depends on exactly where you are, but let's just call it the first half of November. The only place that's not true is sort of southern Brazil. And I didn't, yesterday I looked and our favorite storm was back over southern Brazil. Again, yesterday, I looked this morning, I was going to take another screenshot of it, and it wasn't there this morning. But you basically have sort of a tale of two regions where northern Brazil and in parts of Argentina are too dry and a little hot. And those areas some have already needed replanting, some may need additional replanting. Certainly the flooded areas are at high risk for needing to replant, and some of the dry areas actually may also need to be replanted. And that's really important because it has knock-on effects for the safrinha corn crop. And while, again, there are some people on this call that are probably interested in what's going on in the safrinha corn crop, with some that it just doesn't, if you're just a vegetable oils person, then what happens to the Brazilian safrinha corn crop probably doesn't matter quite as much to you. But we're getting to a point where we are going to start to cut our expectations for Brazilian production in the relatively near future, because again, we're coming up to sort of this time where if conditions don't change and if the outlook doesn't improve, then the yields are going to fall anyway. And we are, and I am in particular, we had a call a couple weeks ago with a lot of the price reporters in South America. And at the end of the call, just for fun, we all kind of put our guesses out for what South American production would be. I'm at the upper end of that range. And so it, short of just perfect growing conditions, it probably makes sense to cut our expectations a little bit anyway. I think it's probably more important that there is the potential, or I guess at this point, the weather doesn't look perfect, and there will be concerns about the weather probably through the Brazilian or through the South American growing season. And that's not something that always happens, or I guess in particular in El Nino years, South American weather is generally better than not. And so it's atypical for the market to be really concerned about South American weather in an El Nino year. Now, this year's rapid transition from La Nina to El Nino meant that there was the potential for drier conditions in northern Brazil, and that's kind of one of the things that we talked about a little bit. But this storm in southern Brazil and the heavy rains in southern Brazil, I don't think that's sort of the normal progression, and certainly the early season dryness in Argentina. Now, in Argentina, they still have a bit of time before they need to get the crop in the ground, but the window is closing. And so I think more than anything at this point, and next week, Joao is going to go into some detail on what's going on in South America. But at this point, it's too early to really kind of pound your fist on the table and say, oh, the Brazilian crop is going to be 145. But I do think that given what's happened the last several years in South America, the market will probably be a little bit more likely to accept the idea that South American weather won't be perfect, and be faster to make cuts to production than it would have been before the last 3 years when La Nina really hurt yields. That has it could have some significant implications for soybean prices and soybean oil prices. At this point, again, it's still too early for the market really to react. But in the extreme, and this isn't what we expect to happen, but just in the extreme, if you had a year where northern Brazil looked a lot more like Argentina last year than the rest of Brazil, you would have a significant crop loss, and that would likely, given world soy fundamentals and the expectations that South America is going to produce this huge crop, real concerns about substantial crop losses in Brazil would take soybeans in relatively short order back up to test their highs, I think, because traditionally you would have the South American growing season, US growing season, And if South America was a little off, or if South America had been off for 3 years and yields were below trend line, the US during that time probably would have picked up exports a little bit. Maybe farmers would have increased acreage a little bit. And as long as the US weather was fine, the US would have acted as a buffer against the changes in South American production. Now, given the demand for vegetable oil from the domestic demand for vegetable oil from renewable diesel producers and biomass-based diesel producers more generally, the amount of soybeans that the US can export is down. And we have soybean exports for 23-24 at like 1.6 billion bushels or something. It's low for sure. And it probably will come up a little bit. But we typically in the past, I think, or the number I generally would have started out with in a year that the US had a good crop, South America's crop was relatively good, would be about 2 billion bushels. So down 400 million bushels on US supplies. Now, there's still some beans to export there, but that's a significant chunk out of 20% out of 2 billion. And so I say that to kind of say the market's reaction to a substantial decrease in South American production would be more extreme than it has been in the past, because the US domestic demand is so strong that the US doesn't really act as a buffer for the rest of the world if there's a problem in South America. Now, of course, there's other, you can substitute canola oil, or you can substitute canola meal, or DDGs, or there's a whole bunch of stuff that you can substitute for soybean meal or soybean oil. But it's not like over the last several years, we've just been building huge stocks of rapeseed, for example, that we could use to substitute for any South American crop losses. Again, it's still really, really early in the growing season. And so my expectation is still that the pattern will change. Yesterday afternoon, when I looked at the radar, it looked like, and maybe this is something that I'm sort of misremembering, but it looked like there were the typical kind of showers over a lot of northern Brazil. And it will really surprise me if South American yields don't bounce back this year and don't get close to trend line or above. However, with each passing day, and given the wonderful graphs that Joao has put together, the main things that I would like to point out are, one, it looks like there's some change coming to Argentina, certainly, right? So we've had a period of relative dryness, and in the way that I always look at the rainfall map here is kind of to compare the slope of the normal area with the slope of the forecast area. And so most of this gap is just due to the early season dryness. And since then, periodic rain and the forecast rain actually looks like it narrows that gap between rainfall totals and forecast rain. So again, really, really early in Argentina, and probably, well, at least it looks like the weather maps are predicting a change in the pattern that would bring about sufficient rainfall. So 10 millimeters is 10 millimeters is like half an inch of rain. So if they get that forecast rain, that should go a long way to restoring some of the soil moisture and also helping planting progress. In Brazil, it's a little bit different. Now, there is a frontal passage that's expected here in the next 10 days that should help a bit. But if you look at the gap between sort of the normal and the forecast rainfall totals, it's getting bigger, unfortunately. And so in Brazil, again, if replanting is required, or if planting is just delayed. A couple of years ago, planting was delayed. The problem is on the back end, at some point, the rain just shuts off. So if you live in a tropical climate, you have two seasons. You have rainy season and you have dry season. And if dry season comes either at the end of the soybean crop or during the development of the safrinha corn crop, that's a problem. Unless you have just tons and tons of soil moisture that will help offset the dryness. Now, the one good thing for Brazil, and in these predictions are an average across the country. So of course, Brazil is so big that the conditions will vary from southern Brazil to northern Brazil. But generally, it doesn't look like it's going to be super, super hot in Brazil, at least not yet. And so to the extent that maybe rainfall isn't quite as abundant as it normally is, it may be that because it's not excessively hot, the rainfall that's predicted, several days of half an inch of rain back to back, could be absolutely perfect. Because if your soil is dry, the last thing you want is 2 inches of rain in 3 hours. The rain will run off that soil and through the drain tiles faster than the plants can drink it. And so a half an inch of rain a day to recharge soil moisture is really, really good, as long as it stops at some point. Like I said, next week, Joao is going to take a bit of a deeper dive into what's going on in Brazil and Argentina and South America, not only with the planning and early season crop development, but we're also going to talk a little bit about the implications of last year's drought in Argentina and the impacts, one, that it's having right now on meal and oil trade out of South America, but two, what are some of our thoughts on potentially the longer term impacts of the potential for Brazil to become a larger player in the export market as the U.S. steps back, particularly in soybean oil. And so we'll get into this a little bit more next week. Okay, on to UCO and yellow grease. So just going to do kind of a real quick run through of the kind of the basics. I didn't really have anything in particular that that I was really dying to talk about in UCO and yellow grease, to be honest with you. This time of the year, after U.S. harvest is essentially done and early growing season in southern Brazil, it can be a challenge at times to find things to talk and write about. So we'll kind of go through this. All right. So first up is domestic production or domestic collection, our estimate of domestic production or collection. And unsurprisingly, you can see that this year has been well above where we have been historically and the 5-year average. And last year was essentially right on the max or set the max for the last 5 years. And we expect next year to be up as well, although not up as much as production has grown historically. So if you look back over the last 5 years, you get about 26% compound annual growth rate in U.S. domestic UCO collection. That seems high, but I think I actually did that calculation. Still seems high. Either way, I think that as UCO prices have risen and as the feedstock demand has grown, obviously there was infrastructure in place already to allow the collection of UCO, and that has kind of shifted into overdrive a bit. I do think that the slowdown from this year to next year, the predicted slowdown from this year to next year, may start to reflect a bit of a slowing in in the growth in U.S. production. Now, with UCO, you never really quite know. And so I've talked before about how I think in some areas there could be, another 50% of UCO. I don't think that that's generally true across the US, but I think that there probably are some areas where UCO collection is done mostly to get rid of a waste product as opposed to a biofuel feedstock. Now, with prices where they are and with demand growing as quickly as it has, obviously the area of collection that might be true has decreased dramatically over the last several years. But there will come a spot where it starts to flatten out, and the growth starts to flatten out, and then production is just kind of steady going forward. When we reach that point, there will still be growth because food production or food consumption grows at the easiest way to estimate it is GDP growth and in population growth. So a couple percent a year, essentially. And that's likely to continue unless there's a significant change in US diets, which actually, now that I'm saying this, I just read an article this morning about the new weight loss drugs and a downgrade of Krispy Kreme because of these drugs. And apparently, I guess I don't know much about these, but I thought that they just sort of, I guess, magically made you lose weight. Again, I really don't know much about them. But apparently it seems like they also sort of change some of your habits, or just the idea that you're taking a drug to lose weight makes you sort of change some of your habits as well. Either way, a stock analyst covering Krispy Kreme downgraded Krispy Kreme because of the growth in popularity in these drugs and the potential for a significant portion of the US population to take them, and then the follow-on impact on their diets or their dietary choices, I guess. If that's true, then UCO production could actually shrink a little bit, maybe. Again, it depends a lot on sort of this unknown, untapped UCO supply and its size. But you can imagine that if people are going to make, for whatever reason, changes to their dietary choices, I don't have a good way to say that, then I think that stuff like Krispy Kreme or fried chicken or other things that are generally vegetable oil intensive are generally kind of some of the things that people would tend to give up if they wanted to go down that path. So it could be that we see everybody in the US taking these drugs in a year or two, and that having a big impact on UCO production. It's early, and I'm basing this on an article that I skimmed this morning. Skimmed this morning. And so it isn't obviously impacting our predictions right now, but as we go through the next half year or year, I think we probably will understand a little bit more about the impact of these drugs on consumption patterns and ultimately UCO collection, and then the availability of UCO for feedstock. So I apologize, I got the thing up on top of my screen and I can't really see what this is. All right, so this is okay. Wow, really bad. Okay, so this is obviously import. This is, I apologize. I think this is meant to be production. And I think, okay, I'm so sorry. So this is actually biomass-based diesel feedstock use. That is the correct title. The a little bit on the side here, the 26% I think is correct, and that actually makes a lot more sense now. But it's obviously not imports, it is biomass-based diesel use. And I wanted to start with biomass-based diesel because that is the whole purpose for UCO and its growth and collection. Okay, so here is a chart for production, and this makes a lot more sense to me. All right, so again, the same theme where collection is up from last year, the 5-year average and in the 5-year range, and we expect it to grow again. However, not by as much as we expect biomass-based diesel demand to grow, and the compound annual growth rate is only is about 8%, which is still pretty. If you do 8% a year, you will compounding is a powerful tool. So take everything that I just said, and this is sort of the production chart or the collection chart. And I do think that if we go back just for a second, okay, this is actually imports. This is what I want to talk about next. So even if we get this slowdown in collection because everybody now doesn't eat Krispy Kreme anymore, imports are still very, very early in their development. And that's why you see the sharp growth, particularly this year relative to last year and the 5 years before that. And we expect that that will remain robust. And in fact, we expect that there is a significant chance that US imports could be significantly higher than we're predicting here. We've got imports about the same next year as this year, but the development of Asian markets and the development, probably most importantly, of traceability for UCO is going to be key in having significant growth from imports, particularly from countries where the traceability, at least initially, might not be there, and there might be some doubts about whether what's showing up is actually UCO or it might be something else. So despite the sort of anecdotal reports earlier this year about a couple of cargoes getting turned around because it wasn't UCO and kind of all of that, you can see it hasn't really slowed US import demand at all. And those stories earlier in the year, this spring, I think were by far the exception. And I haven't heard too many more stories in that same vein since then. Now, if you trade UCO every day, you've probably heard more stories like that, but there has not been another episode where I think, cargoes were turned away because there was some doubt about what they held. As that gets smoothed out, then in theory, you can take UCO from lots and lots of places and send it to the US. And so it is the one area where we always kind of say, the low CI feedstocks, the supply is fixed on some level because you're not going to kill another cow to get tallow. UCO is the one area where that's not necessarily true. Now, we're not going to necessarily fry another batch of donuts just so we can get the used cooking oil. But because it's such a large market and because it's relatively untapped so far outside of the US or outside of a lot of developed countries, there is room for significant growth in US imports. And so I say all of that to kind of say that it wouldn't be surprising if next year's imports were significantly higher than this year. I don't know that they'll do 250% growth like we did this year, but you could see another big step up in U.S. shipments, and that'll depend a lot on where we get UCO from. So you can see just last year, the bulk of it came from Canada. And while our shipments from Canada have grown, the portion of the total represented by shipments from Canada has shrunk pretty dramatically. And we expect that that'll bounce back a little bit next year. But again, we could be a little low in our expectations. And in particular, I think that the 688 million pounds from China is an area that could grow a lot more than we expect it to. The key to that will be, one, getting the traceability, and then two, what are prices doing in competing markets, which is generally the European Union. And so the next slide will be Chinese exports by country, so we can kind of look at those trends. But I think that it is important to say that in the longer term, the UCO supply may ultimately end up looking more like the US soybean oil market than the Chinese UCO market right now, I guess, where in China, I would assume that most of the UCO collection is done specifically with the aim to export it. And the US soybean oil market is obviously more and more domestically focused every day, but it's already dropped exports down to almost zero. And the way that that would happen is if we get a lot of country by country SAF mandates, then every country, a lot of countries probably, will want to develop their own biofuels industry and will want to keep the UCO in country and then turn it into fuel and then sell that fuel and keep all of that value in country. And I think that that is something that probably, I don't think that is something that will happen in the next year or two, but I think if you look out 5 years or you look back 5 years from now, or certainly I think by 10 years from now, then I think that the world feedstock market is going to look different, because I think there's going to be a lot more focus on domestic production and domestic feedstock supplies. And so when that happens, then the US is going to need to figure out either a way to be significantly more efficient with the feedstock that it has, or is going to need to make some changes that will reduce liquid fuel use, or other changes that would allow the production of the volumes of biofuel that we all think that they're going to produce. Again, we've got some time to figure that part out, and there aren't any new announcements or anything like that, or at least that I'm aware of. But it does seem like it's coming. It seems like SAF is probably a relatively easy change to make that will be popular with a lot of countries, and there are several that are already looking at it. And it will really surprise me if the theme of the biofuels markets over the next, again, 5 or 10 years isn't sort of this shift from trade flows around the world, or a lot of low CI feedstocks going to Singapore and the US and the European Union, and more domestic biofuel industries popping up or developing in the countries that impose these mandates. Apologize if you can hear that sharp, loud tone. It just means that my battery backup is going. Usually doesn't go this long, so apologize if that's annoying. So what are the chances that as China grows, it will still have sufficient supplies to continue to support sort of the growth that we expect in US biofuel production. And I looked at Chinese UCO exports by destination over the last several years. And we do this, we have a model that essentially predicts Chinese production and production in other countries, and then predicts their exports. And so this just comes out of that. 2023 is not the full year. 2023 is just January through August. But you can start to see a significant change in the trend. So for 2023, the only two areas that are above 2022 are the US and Asia outside of Singapore. And even that one's really, really close. The US growth is huge, and a lot of it looks like it came from Europe, or not shipped through Europe, but supply that in 2022 would have gone to Europe, but now has gone to the US. And the fact that not only is that happening, but you don't really see growth anywhere else, suggests that the US is probably the most competitive feedstock market. And that shouldn't be a surprise with the value of RINs, even though it's come down. But if you add RINs to the LCFS credits, to the blender's tax credit, cap and trade, and by the time you get through all of that, it shouldn't really be a surprise that the US is a really attractive market for feedstocks, and there probably will be a shift. And I think that probably part of the reason that we hadn't had more Chinese UCO shipments to the US is, when the European market was attractive and that worked, and there was probably maybe a bit of initial hesitation on the traceability side. And so if that is solved, and based on the growth in 2023, I would suggest that maybe it is, then the growth in US UCO imports from China could be significant, really significant, and could support substantial growth in renewable diesel production, SAF production, biodiesel production in the US, without necessarily bumping into the supply constraints that we associate with low CI feedstocks. Now, that all sounds really easy, but of course, it's for the people that are actually doing it, it can be a challenge. I think if you sort of think about it, and I'm not a chemist or a chemical engineer by any stretch of the imagination, but if you think about sort of the ease of working with feedstocks and that spectrum, soybean oil, canola oil, those types of feedstocks are probably on one end of that spectrum, and then UCO is probably at the extreme other end of that spectrum. So while all of this supply is probably available, it doesn't necessarily mean that that's all people are going to work with. Of course, if you can get your pretreatment unit up and you can get it going, and you can process the UCO easily, then it becomes really, really easy to choose UCO over other feedstock. But I think that probably is something that has been a little bit more difficult than some people in the industry thought, or maybe it's been a little bit more difficult for some industry participants than others. It's probably really challenging just straight across the board, but that part there will always be a little bit of not even hesitation, but just a little, you know how if you have two jobs to do and they tell you to do the hard one first, because once you do that one, then it's easy. It's kind of like that, I think, except in reverse, where you want to do this one kind of last. The economic side of it is good, but the chemistry side is probably a little more challenging. Anyway, so it should help offset some of the growth that we see or some of the anticipated growth in SAF production as we go through the next several years. All right, so finally, this is our combined UCO and yellow grease U.S. supply and demand with our estimates. The only thing we didn't really have a slide for, and we didn't really talk about our U.S. exports. The U.S. used to export a fair amount of UCO. Part of that went to Singapore. A significant part of it went to Singapore, and much like the soybean oil market, those just basically shut off this year and dropped down almost to zero. We would expect that there probably will still be a little bit of export demand, I guess, going forward, but for all intents and purposes, it will be zero. The other thing that I would say is that you see in 23-24 here, we actually have growth in biodiesel usage, and going through a lot of the feedstocks right now, and our biodiesel usage across the board is probably going to come up a little bit based on the idea that we haven't yet seen really substantial rationalization in biodiesel capacity. Now, I've talked about, and there are anecdotal reports about idling capacity. Those have remained anecdotal reports, so it's hard to put a lot of credence in the implications of that. And so at the moment, we're still kind of going with the idea that that biodiesel looks profitable to us, and until that changes, and until that changes in a way that convinces biodiesel producers that it's not coming back, I think we probably are going to probably will raise our 23-24 biodiesel forecasts, and 24-25 a little bit less, for two reasons. One, obviously the switch to the IRA credit will have an impact on the larger part of the marketing year in 2025. And two, it's easy right now, or it's easy, I haven't had this right, but with biodiesel margins positive and looking relatively good, it's kind of easy to say, okay, well, yeah, now I think 2024 production is going to be steady, or a little higher, a little lower, whatever it may be, but not a big drop off like we had forecast for much of this year. And so I think we are just kind of catching up to this idea that some people have had probably for a little bit longer than we have had. And whether that translates ultimately into 24-25, a lot of that will depend on what happens in the 23-24 marketing year, and what biodiesel margins look like halfway through that year or a little later. The margin forecast that we have now still remains higher than I would like, or higher than I think it will actually realize, because we still essentially have lower soybean oil prices forecast and higher energy prices. On the low CI side, if you made biodiesel out of low CI feedstocks, your profitability is probably maybe a little bit less, just because of a little bit more expensive feedstocks, depending on what you used exactly. But either way, it's not entirely clear, or it's not. There are some things as an analyst that you can see, and you can see a couple of years ahead of time, and you say, no, that's going to happen. I would bet my house that that's going to happen. And there are some things that are right in front of you, and you don't have a good sense of which way you think they're going to go. And biodiesel is one that I have been really confident in the past. I don't know that I ever would have gotten to the point that I bet my house, but it has now gotten to the other side, where it's one that I would struggle to say that I really feel super confident in my 22-23 predictions, honestly, or my 20-24 23 predictions. Okay, that is it for today, and no questions and only 45 minutes. I am going to try to shorten these up a little bit in the future. Having people on here for an hour and 15 minutes is just not something that I think anybody wants to do. So we're going to try and keep them a little shorter going forward. Like I said, next weekend or next week, Joao will go into a little bit more depth on South America and what's going on down there. Thanks for attending. Thanks for your support. Everybody have a happy and safe Halloween, and I will see you back here next week. All right. Bye-bye, everybody.